Do you concur with Kathy's bullish assessments of Tesla, or do you believe they are unjustified? What is your current opinion of Tesla? She has always been a big fan. In this video, we'll take a look at the current projects that Tesla is working on and hear what investors like Kathy think about them. We'll also make a low profit prediction that should be able to assist you in deciding what your next financial move should be. Let's start this video now without further ado. The bold claim that the Cybertruck has the potential to become as popular as the Tesla model was made by ARK. Invest in their most recent post regarding Tesla. There has been a lot of enthusiasm about this revelation, which is rather astounding. Let's examine this intriguing article more closely. Electric vehicles, EVs, were originally thought to be a niche market product by analysts, forecasting organizations, and automakers. It now seems that they were also wrong about the possibilities of the Cybertruck. In addition to exposing an industry blind spot, ARK Invest challenges these low expectations. The proceeds from the sales of their gas-powered trucks are currently used by many automakers to fund the development and selling of unprofitable EVs. Traditional automakers may face major difficulties if Cybertruck manages to sabotage this source of revenue. This is a fact rather than just a potential. Some automakers like GM do have reason for optimism, though, as they are finally acting appropriately, if a little late. Then ARK Invest goes back in time, emphasizing how the U.S. Energy Information Administration anticipated that long-range electric vehicles will have little to no market share in the U.S. by 2040 in its first year of operation in 2014. Surprisingly, just later in the year, the market share of U.S. EVs reached 5%. The IEA must have considerably changed its projections, probably anticipating at least a 50% market share. Even that, though, would be viewed as bearish. It's significant to note that by 2030, 2035, and 2040, numerous states and areas around the world intend to outlaw the sale of gas-powered automobiles. When generating projections, these aspects would surely be taken into account. ARK Invest has been outspoken in its criticism of the Energy Information Administration's projection. They expressed doubt about the IEA's capacity to reliably estimate the future of the electric vehicle market, even speculating that the intelligence underlying these forecasts has degraded. As proof that the EV revolution is well underway, ARK Invest points to the ambitious intentions of venerable automakers like Ford and General Motors. They underline that these established automotive behemoths are making significant investments in electric cars, indicating a transition toward a more sustainable future. The idea that EV adoption is just a niche movement was contested by such actions by prominent participants in the sector. By highlighting the innovative business practices of organizations like Ford and GM, ARK Invest seeks to refute the IEA's projections, arguing that their estimates underestimate the market for electric vehicles' enormous potential and rapid expansion. This criticism serves as evidence of ARK Invest's optimism regarding the widespread use of EVs and their conviction that the future of transportation will be increasingly electric. Ford anticipates that by 2030, 40 to 50% of its global car volume will be entirely electric, and GM aims to go completely electric by 2035. ARK Invest issues, given the data the IEA is using and the fact that numerous U.S. states, including California, which alone represents roughly 13% of the U.S. market, are proposing to outlaw the sale of gas-powered vehicles after 2035, it seems clear that the IEA's estimates are incorrect. Although it may seem that I'm frustrated, I actually find these predictions to be quite positive because they offer investors like us a fantastic chance. Along with the government's sluggish adoption goal, there are fund managers and regular investors who continue to ignore the truth. While I disagree that the rate of EV adoption will be as low as the government agency predicts, I must admit that few people can be as mistaken as they are. It appears by looking at past growth trends that they were unable to understand the idea of exponential development. Furthermore, according to the IEA, by 2050, 69% of all cars in the US would be trucks, notwithstanding the estimated less than 10% market share for electric trucks. Contrary to this prediction, ARK Invest thinks otherwise. They also said that the Cybertruck has received 1.5 million reservations, which increases the likelihood that electric trucks would succeed. Early Google Trends data suggests that the Cybertruck might achieve the same level of success as the Tesla Model I. I realize that using Google Trends alone may not be the most dependable technique to make precise predictions, but bear with me. Just after Elon Musk tweeted about walking on April 2, 2023, a production line for Cybertrucks, Google searches for the Cybertruck outnumbered those for the Model I. It's noteworthy that the majority of searches for the Cybertruck came from truck-loving regions, indicating a potential interest in buying one. The red color's intensity on the map represents the concentration of searches in these particular places. In the end, the cost of the Cybertruck will be a major factor in its success. Sales may be low if it's too pricey. However, sales could rise if Tesla is able to provide a more cheap choice. Investment firm Arcane West continues to emphasize that while sell-side analysts might be hesitant to forecast exponential growth in the market for electric vehicles, it would be a mistake for them to disregard the potential ramifications of the Cybertruck's success for conventional manufacturers. By 2027, global EV adoption may reach 70%, according to ARK Invest. Even though this number might appear optimistic, it's not completely improbable. On Twitter, an image has been circulating, and experts are debating the caliber of the Tesla Cybertruck. Important to keep in mind is that the Cybertruck is still a prototype. However, it is reasonable to anticipate that Tesla will continue to uphold high standards for quality, given that the Model I has been the best-selling vehicle this year. Any early worries regarding the quality may probably be addressed and eliminated. Kathy Wood recently discussed Tesla's efforts on AI during an appearance on Bloomberg. She made reference to the network of driverless taxis that Tesla is rumored to be constructing. Comparatively to other auto and tech businesses, Tesla enjoys a huge advantage in terms of proprietary data and real-world driving models. Wood thinks that the autonomous taxi platform offers a huge possibility for a business that can transport customers quickly and safely from point A to point B, excluding the unknowns of the Chinese market. Tesla, in Wood's opinion, will be the business that dominates the market share in the United States. By 2030, this chance might yield trillions of dollars in revenue worldwide. For this reason, Tesla's AI developments and its growing production efficiency in factories and cars thanks to artificial intelligence excite Wood and her team in particular. Kathy's enthusiasm for Tesla's stock may strike some as being excessively enthusiastic, but a closer look at her track record indicates an astounding success rate, particularly with Tesla. I completely concur with Kathy's points of view, especially the importance of fully autonomous technology for Tesla's future that she emphasizes. Kathy should be commended for her outstanding achievement in the Tesla stock market thus far. It's important to point out that Kathy's choice to hold on to Tesla stock even after the 10% allocation restriction was reached has paid off. Even though she is unable to expand her holdings after the stock rises over this level, she has shown that hanging on to her positions can result in significant profits. Her performance over the previous 5 years would have been much worse, around 10%, if she had sold Tesla's shares every time it rose above 10%. Throughout the COVID epidemic, we've had an interesting connection with China. We initially made big investments because we believed that China's monetary and fiscal policies had promise, but things have drastically changed since November 2020. Our decision to considerably minimize our exposure in China was made as a result of the onerous restrictions and regulations management teams had to deal with. The idea of common prosperity has gained popularity, which denotes reduced profit margins and fewer services available to Tier 1 and Tier 2 cities. We have reduced our exposure until China becomes once again more receptive to foreign money, even if we still have some interaction with JD Logistics and GD. As someone who has a great deal of affection for Tesla stock, its exposure to the erratic relationship between the United States and China is the only thing that worries me. However, I think that this worry is primarily of a short to medium-term character, and over time, China's importance will steadily decrease thanks to Tesla's plan of diversifying its operations and building gigafactories around the world. Even in the worst-case scenario, where tensions grow and trade barriers materialize, Chinese businesses might find it difficult to gain access to Western markets. While Tesla might have trouble selling in the Chinese market, such a condition may not always be bad, especially given that China is likely to develop strong competitors in the long run.